please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV-18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me are Anuj and Surabhi. And markets globally, which are looking a little troubled at higher levels. I mean, we actually have positive news in terms of the tax reform. Nukin's interview with CNBC itself was pretty crystal clear that we are going to work towards a Christmas deadline. But the markets are shaking off, getting troubled by something. So it's not just Wall Street and European markets on Friday, but even the Asian markets are opening with a dash of red. Let us remember that in India as well, the Moody's-induced rally, upgrade-induced rally on Friday towards the end saw profit-taking, which may be natural after such a big rally. But nevertheless, it's important to note that, it was not a trending upward market and the markets didn't close at the highest point of the day. The FI buying is a positive, although it may be only in HDFC, the insurance company shares. But nevertheless, I think that was a positive. The Reserve Bank cancelling the OMO, the open market sale of bonds, is extremely positive for the bond market. Moody's was nothing compared to this in terms of a positive, because the central bank is saying they don't like yields above 7%. That's how the market's understanding it. So there are those positives. But for me, the bigger positive is the Trans-Harbour link is finally coming after so many years. I think we've heard it for a better part of 2 decades. And airline traffic, Sonal was pointing out, 20% higher. So, in a large sense, the macroeconomy is in order. But, Surabhi, I leave the day's activities to the expert.
All right. Good morning, Latha. Yeah, you summed it up. I think that was also a big headline for me over the weekend, when just being in the city of Mumbai. It's 30 years of a dream in the making, finally seeing a little bit of a reality. But the other reality, obviously, is also the fact that we've got a fair amount of red across global screens. And oil started becoming a talk point again. There was a big resurgence in oil prices on Friday, and we are still looking at that level of around 62 odd. So the cool-off in oil prices that India would have liked to see, that is not yet taking place. So we can still see a range-bound move between 62 and 64 on Brent oil prices. Anuj, good morning. So yes, there are a fair amount of worries. I mean, if you want to sort of nitpick, there's a lot that didn't go right despite the Moody's upgrade on Friday. But just looking at the way institutions participated and the big kind of liquidity gush that we got in, do you think the market can climb this wall of worry as well?
Morning, Surabhi. We were doing closing bell and made this point that watch out for the institutional numbers. Was there in the internals, though a large part of that was HDFC Life, but that is also buying, right? I mean, as is primary market buying. So, as expected, strong institutional buying, 2,740 crores by FIs and DIIs, and that would have offset a lot of domestic profit taking. Domestic profit taking would have happened because a lot of people would have been jittery after the kind of fall, and a 2-day 150-point rally, you would normally want to take some money home. Also, it was Friday. But if you look at the individual stocks, ICICI Bank, for example, almost 380 crores of buying, HDFC 550 crores of buying, Yes Bank 300 crores of buying. So there was quite a bit of buying. The key here is what happens to the retail and HNI sentiment. I think that will start to improve only if this rally lasts. But for me, the most important thing of the last week was that we respected 50-day moving average and we broke the pattern of lower low and lower high. On Thursday and Friday, both days, we made higher high and higher low. Now, third day running, can we do that? For that to happen, the Friday low was 10,268. I think that could get tested first if we have a flat start. High of 10,343. Trust me, if Friday high of 10,343 is taken out, you would see a lot of short covering because the market is still net short if you look at the overall data. The Bank Nifty has made a new high, and whenever Bank Nifty makes a new high, it normally is a matter of when and not if Nifty does that, because you have the largest component of the market making a new high. So I think the Bank Nifty may carry the Nifty along with it. All you need is some buying in Infosys, some buying in Reliance, ITC, Larsen & Toubro maybe, and the market may move on. The caveat being global markets, they're sulking a bit. I think that's something to keep an eye on. But I think we may have put the worst behind us and may be ready to move on.
Okay. On that note, let's quickly take a look at what some of the wise experts are saying as we get into trade this morning. Abhay Elijawala of Deutsche Bank and Lawrence Belanco of CLSA have, these are their calls as we look at trade this Monday. First of all, Abhay says the ratings upgrade, which they believe has been long overdue, is a very strong global endorsement for the Modi administration's game-changing reforms, particularly the bankruptcy code, GST, and the bold move on recapitalizing state-owned banks. Deutsche Bank strongly believes that the Modi administration has focused on cleanliness, transparency, and formalization of the economy over the pursuit of near-term growth. Abhay adds that financials and infrastructure should be the key beneficiaries of this development. Rating upgrades should be positive for companies that have traditionally borrowed from overseas markets, as better ratings should lead to lower risk premiums and hence a lower cost of capital.
Okay, and this one from Lawrence Belanco of CLSC. He says the Nifty's decline of the November 6 high of 10,530 has quickly fallen back to key support provided by the rising 50-day moving average, which now coincides with the August and September highs at 10,159 to 10,188 area. He says to sustain the breakout and bullish interpretation, price action needs to hold and rally off this cited support zone. He adds, should the Nifty fail to hold above the 10,149-188 support zone, the next support zone is seen as 9,600 to 9,700 area. Okay, but we are still a distance from the 9,150 area.
Well, okay, let's say in the kind of buying that we are getting, maybe those levels might not be tested. But anyhow, let's move to the money market, because that's where the problem was. We didn't see the euphoria last in the money markets on Friday for sure. Pramit Brahmbhatt of Veracity says, considering the indecisiveness or the indecisive movement of the equity market, the rupee is expected to trade sideways. He expects the USD-INR pair to trade in a range of 64.80 to 65.20 today.
Yeah, I mean, I agree that there was profit taking even in the rupee, but I think the rupee is going to genuinely be a beneficiary. Look at the HDFC IPO, foreign funds coming in. This is huge. I don't think, and the dollar's weak globally. So I'm not worried about the rupee, but in the bond market, there's definitely going to be a bit of a Diwali. Ajay Manglunia of Edelweiss says there was a surprise announcement for the bond markets post-market closing, with the Reserve Bank withdrawing the OMO sales schedule for this week. He says this is in response to the narrowing of the liquidity surplus, and it will drive optimism among participants about discontinuation of the fortnightly OMO sale program for now. Ajay adds, combined with the rating upgrade, the market response should be encouraging. At open today, 10-year benchmark bond yield likely to trade in a range of 6.95 to 7.02 today. I strongly suspect it's going to be below 7.
Okay, and that, of course, would be a good trigger for the market and for a lot of NBFC stocks as well. But globally, picture is slightly murky. Let's go across to Nigel for the world view.
Well, that's right, Anuj. Slightly murky, in fact. We had the Dow as well as the S&P. Both of them posted their first two-week losing streak since August, so that was not good news. What's the big worry in Friday's trading session? Well, tax reforms. When is it going to be pushed through? There was a bit of a difference between the House of Representatives as well as the Senate in terms of timing as well of that long-awaited tax reform coming through. And that's what really caused a bit of a ripple on those markets. The Dow was dragged down because Walmart did come in for some selling pressure. So that was a big drag on the Dow, while in fact the Nasdaq, that ended lower because we saw it selling on the likes of Amazon, Netflix, as well as Alphabet. Shifting focus to the European markets, all the three big boys, they ended in the red. A couple of sectors were underperformers. Utility space did get knocked back. And in fact, we had the retail space as well that did get hit because H&M was down close to around 2.5% in Friday's trade. Well, peripheral Europe, we did have selling on the Italian as well as the Spanish index. Both of them ended in the red, but the ATHEX, that was a relative outperformer, ending with a gain of around 1.5%. Green on the screen as far as emerging markets were concerned. Both the Brazilian as well as the Russian index, they ended with gains. But the big headline that came in early this morning is that, in fact, Angela Merkel, maybe, in fact, she's going to have a bit of trouble in retaining a fourth term. The coalition government that's currently, on in Germany may fall through, and that could result in snap elections. And that seems to be a worry that's playing out in the Asian markets as well. All those markets trading in the red. The SGX Nifty as well is indicating a subdued start. Back to you.
Thank you very much for that summary, Nigel. And I think I was just saying that the dollar is struggling a bit, but with this Angela Merkel news, you could once again see the euro in trouble, and therefore, by comparison, the dollar actually strengthening. But let's see, at the moment, dollar is flat from its Friday levels. Okay, before we end and go into a break, the Moody's ratings upgrade has interpreted that India's potential is likely to materialize. That's the word we got from someone who's usually very conservative, former Reserve Bank Governor Y.B. Reddy. I caught up with him over the weekend, and Dr. Reddy says that the measures to strengthen the Indian economy are in place now. He believes that the potential growth of the Indian economy can rise given the steps in place.
Many of the reforms undertaken in the recent past had two implications. One, some sort of disruption in the short term and potential for very good things in the medium term. So I think Moody's in a way is trying to say that though there is some disruption now, it's going to result in good things and perhaps in a way strengthening the forces in favor of good things type of thing. But I think it's really a potential which they interpret is likely to materialize.
How would you interpret it? Do you think the steps undertaken, and if you can even tell me which steps, and
no,
whether
I think basically definitely the GST issue. But more important is the ecosystem like insolvency code. See, the fundamental institutional underpinnings that should strengthen the ecosystem of finance
are in place?
Are in place. Or at least there is an attempt to do that in a big way, which was pending for a long time. And so therefore I think even GST, it has been in the making for 17 years. So obviously there are a lot of difficulties, otherwise why should it wait for 17 years? So there are difficulties, but they are prepared to face it. So I think in that sense, Moody's rating represents a hope which is backed by reasonable expectations.
Now, of course, the big news from the government is that they have announced 2.1 lakh crore of capital. Do you think that that addresses the problem, or do you think it should be preceded or at least accompanied by some reforms?
You want to see in the actual scheme of things, though you can make an attempt, structurally and historically that can't happen. You see, basically what you are doing is for the sins of the past to ensure that normal activity goes on, you have to put in
capital.
So unless you decide in advance to sell, the moment you have decided to put in capital, you are putting in capital. Whatever conditions you put, you can't put conditions for capital. You are only telling the management to do it. You have to hope for the best. You can't withdraw the capital, so there is no recourse.
Yes. There is no recourse, but what would you have, at least post facto, the government do?
No, I think I would definitely say that immediately you have to put the capital so that the activity goes on, they should not choke.
It does look like citizens' money or taxpayers' money is being used without let or hindrance. But the key reform would be what?
That's where I think you have to take a view about the mix of public sector and private sector.
You would prefer fewer banks, fewer public sector banks?
No. My limited point is why money is locked up, taxpayers. You are paying more. Tell me why you want public sector banks. If you say public sector banks are required for backward areas, then strengthen those banks which are operating in backward areas, if you want some. Okay. My point is, you think also you do the consolidation efficiency. If you want public sector banks to be as efficient as private sector banks and perform exactly like that, then why have a public sector bank? So now you have to design a public sector bank which has a purposive existence, which commands the assistance that are required.
Read on the screens across Asia, the SGX Nifty is down about 0.25%. So these are cues that we have to deal with. Let's now boil it down to stocks and see where the excitement might lie today. Our entire team is standing by as always. Good morning, guys, and happy Monday to all of you. Anuj, as always, I'll start with you. What are you watching out for?
Yes, sir. With the caveat that just keep an eye on the Nifty. The SGX Nifty is now down 23 points. I think for morning, the sector of the morning could be logistics. We saw that rally in last half an hour on Friday as well. Our colleague Lakshman broke the story on Saturday that logistics sector will get infrastructure status. Now that could be a huge game changer for logistics after GST as well. And if you look at just some of the stocks, for example, I was looking at some stocks, Patel Integrated Logistics. Its market cap is 150 crores. Its annual sales, 450 crores. EPS at 5 rupees, trades at 18 times. Some of these companies will now start to get loans at much lower interest rates. So that I think would be a big trigger. A couple of other stocks like Snowman Logistics. It was up 12% on Friday, but still off 15% of its peak. Again, if you look at the valuation metrics for Snowman, quite okay. All Cargo Logistics, again, decent delivery buying. The stock still 16% off peak. So that's one sector which could sort of outperform today. But as I said, the caveat is that we should not have an ugly day for the market. That's something to watch out for. But this could be the sector of the morning.
Okay. Yeah, you know, getting infrastructure status certainly simplifies the procedure. And it's a few basis points lower because banks want to fill that quota. But if you already get that quota because of roads or because of this giant that we are now going to announce, then it may not be that much of a benefit. And that giant that we are announcing is that L&T has bagged this massive 8,560 odd crore order of building the Trans-Harbour roadway, the Trans-Harbour link, which will link Shivri in Mumbai to the coast of New Bombay. This is, of course, several decades in coming. It's a massive order. Anisha, tell us, it's with a consortium.
Well, yes, after much delay, this Mumbai Trans-Harbour link project has been awarded to L&T. Now, two of the packages came to L&T, Package 1 and Package 3, totaling to an order value of around 8,650 crores. Now, while Package 1 is in a consortium with IHI Corporation of Japan, Package 3 is what they have won on a standalone basis. Now, this comes in a backdrop when the L&T had cut down its order inflow guidance from a growth of 12 to 14% to flat, and the fact that L&T has been losing quite a bit of big ticket order sizes. So this comes as a positive for the company, and I expect the stock to hold up in the green. It might be a bigger positive for the likes of Reliance Industrial Infrastructure Limited and Jaycorp, because they have huge land parcels in the area of Shivri, as you mentioned, and this is what is expected to improve the connectivity to that region, and the value of that land is expected to go up. Back to you.
Okay. Well, through the course of the day, we will put out that map for you and show you exactly where the link is. All of us are in Mumbai, so we just assume. But it really cuts travel time in a very big way, if and when it comes up, of course. But we'll indicate that to non-Mumbaikars.
No, absolutely. And more than that, Latha, I remember this because when I started my coverage as a real estate correspondent, this was supposed to be the critical link that was supposed to change Mumbai's access, not just making it a north-south city, but, you know, linking it to the mainland, and therefore all the development that was supposed to take place in Navi Mumbai. That's L&T, important for the company and very important for the city of Mumbai. But Latha, let's get back to the NBFC. So all the bond market action, I mean, the yield surged to what, a high of, I think, 7.05 on Friday.
Absolutely.
But now with this OMO...
Yeah, absolutely. From 7.06, it came down to 6.96 early morning. But then it climbed back to 7.04. After that came this cancellation of bond auction. It's actually a sale which will take out money. Since the supply is not going to come, that 10,000 crores, I would expect that they would come back to 6.95, positive for NBFCs. Companies like Yes Bank, which have a lot of corporate, they take exposure to the corporate bond market rather than give them loans. As well, PNB, Abhishek was telling us, has a lot of duration. So all those should benefit.
Okay, all those should benefit. But the other stock in focus is Stride Shasun. They've sold their branded business to Eris. Ekta?
Yes, absolutely. I think both of them should probably be in the green today because it seems to be a win-win deal for both Strides as well as Eris Life Sciences. So Stride Shasun has sold its business worth around 500 crores to Eris Life. Eris Life will basically fund the deal via internal accruals as well as debt, and they don't have much debt on their portfolio anyway. So net-net it should be positive because it will push them into the top 10 domestic companies when it comes to central nervous system drugs. Also for Strides, it will probably push their margins higher because this current business has around single-digit margins, and that 400 crores out of 500 will be used to repay debt for Strides.
Okay, all right. So that's Strides Shasun in focus once again, along with Eris. But watch out for the cement company. Some not so good news coming in because what the Supreme Court has said with respect to use of pet coke. Nigel, what's the impact like and who gets hit?
Well, it's not good news at all. All the stocks that are flashing for you on the screen, they're going to get hit. Remember, first the pet coke ban was in the NCR region. Now it's been extended to the 3 states. That's UP, Rajasthan, as well as Haryana. The fear is it can be extended to the entire country. So clearly these stocks are going to get hit. Morgan Stanley says that, in fact, Shree Cement, that's going to get hit the hardest because 70% of their capacity is in the affected regions. And also, in addition to that, 100% of their fuel comes in from pet coke. So that's going to be one stock that's going to be in focus. Others include the likes of Ultratech Cement, JK Lakshmi Cement, as well as Ambuja. Citi has come out with a note. They're saying Shree Cement's hit could be nearly around 5% on the EBITDA front. ACC, Ambuja, and Ultratech, they could get hit by nearly around 1%. And in fact, if they don't increase prices, then they're going to hit rather hard. Potential beneficiaries, could be Coal India and GMDC, because that could be the alternative source of fuel.
All right, thanks a lot for that, Nigel. But there is an important statement coming from Biocon. It confirms that, and that will flash for you. The ticker team should please note it's come on the BSC. Biocon confirms that the US FDA has issued an establishment inspection report in relation to the current good manufacturing practices of its aseptic drug product facility that was audited between 25th May and 3rd June.
I guess, isn't this
that's Ekta, which facility is this?
Well, I think they're talking about the Bangalore facility, because I don't have the press release with me.
That's all there is. I've read the entire thing to you.
Yes, I'm assuming it is the Bangalore facility. Now, there was a brokerage note which had come out on Friday itself indicating that the Bangalore facility had received a VAI status, which is a voluntary action indicated status. Now, what that means is that the USFDA is not going to come and re-inspect the plant. It's going to say, okay, you can solve your observations on your own, and once the remediation is over, we don't need to re-inspect the plant, and we'll approve it in that case. So that's the reason why you're seeing, you're probably going to see the stock higher even today, because that was the biggest overhang for Biocon. Simply because this particular Bangalore facility has their biosimilars such as trastuzumab, which is filed from this particular plant, and as well as pegfilgrastim. So trastuzumab has its target action date on the 3rd of December, and hence we're probably going to see maybe some amount of clearance coming in. Or we don't know if the USFDA will have other issues, but this is one of the biggest deterrents, and hence this has now been cleared. So it's a VAI status plus an establishment inspection report. It's EIR, we all know.
Inspection closed, it says.
Exactly.
Biocon's facility receives EIR with VAI status.
Yes.
Inspection
So what
closed.
that means is that the EIR means that the inspection is closed. VAI means that we don't need to come and re-inspect the plant in Bangalore. You finished your remediation. You finished the remediation to these observations. That's enough. We don't need a USFDA re-inspection. So this is positive because this is for Biocon's Bangalore facility from the USFDA. Remember that the European inspectors had a problem with the Bangalore facility, and that requires a re-inspection in any case where they have completed majority of their remediation or a majority of it. So this is going to be positive because the target action date for trastuzumab is December 3rd, which is in combination with myelin, and it is expected that probably will come through then.
Yeah, if this comes through, then there's a much bigger chance for that.
And that's a breast cancer drug.
No, I take Ekta's point, and I think you know, compared to say DVs, which had already rallied a lot, and Biocon, this news was in the market. I mean, it was a buzz, but it's not fully priced in. So my sense is that, you know, this was a big overhang on the stock. So there could be interesting action on this one. I take Ekta's point on that. So,
and I just want to point out one more thing for Divi's Labs. They've got an EIR for their September inspection, not for the earlier one where the import alert was removed. So that's positive news for them as well. Seems that USFDA is really on an overdrive right now.
Okay, we'll try and see if we can get these companies to speak to us as well. But this is
there's one more thing, you know, which I was hearing, I think last month, that the USFDA is also on overdrive because, you know, after having put so many Indian companies under, you know, import alert and warning and all, there's serious shortage of drugs in the US itself. You know, that's a problem. So I think they are also...
They have to speed up
the inspection procedure. But we'll try to get, you know, Ms. Shaw as well to give her comments on this. But for now, let's address some other stocks. Naveen, Mayur Uniquoters?
So two news on Mayur Uniquoters, Anuj. One being the buyback, the other one being the results. I'll address the buyback first. A low amount in terms of the buyback ratio. It's just 1% of the total share capital. But remember one important thing, that it's a tender buyback and the price is at 550 rupees, which is almost 20% above the current price. So that is nevertheless a small positive. On the other hand, results, strong set of numbers. If you see the revenue growth, that has come at around 15% growth at around 140 crore. On the other hand, if you see the margins, they have also maintained the margins around the 25% mark, even though the gross margins, they have fallen because of a high raw material cost. Overall, I expect the stock to be in the green today. Back to you.
Okay. All right, Naveen. Many thanks for that. Moving on to some of the white good companies. Anisha, some buzz that maybe they also get GST respite because they were left out when the big rate rationalization happened in the 28% bracket.
Well, yes, last time we had heard about cables and wires, the rate coming down for them to 18%, but today maybe the white goods will hold up in the green, given the fact that reports suggest that the GST rate might come down to 18% versus 28% that it currently holds. Now, this can happen as early as the next GST Council meet itself. Remember, pre-GST rate was around 26%, and there was margin compression seen of around 100 to 100 basis point on these companies. That should go away. And also, demand offtake hasn't been too strong after the one that we have seen in Q2 as well. So maybe that also gets a fillip. So overall, a positive for the entire sector. Back to you.
Thanks a lot. And then big boy Infosys, what's the buyback news?
Latha, there's a bit of a disappointment there because a lot more shareholders have come in to participate in this buyback. The number of people that are eligible. One factor was already the rupee was strengthening, so that wasn't good news for them. But over the weekend, we got dates. When is the buyback going to open? When is it going to close? So that's going to happen on November 30th. There are a lot of retail players, they were looking to play this buyback. Who's eligible for retail? Those that held the shares on November 1st, which was the buyback date. So people are wondering, how will I be eligible for that? That's if you hold shares to the value up to 2 lakh. So now they've given clarity in this release that as of November 1st, the close price was 927. You divide 2 lakh divided by 927. So effectively, if you have 215 shares, you'll be eligible for this buyback. The problem is that the total number of people that they said are eligible is 5.97 crore shares. At one point of time, the sheet was working with 2.9 crore shares. Now, if it was only 2.9 crore shares, 1.7 divided by 2.9, you would say the acceptance ratio is 59%. But now, in fact, it is 1.7 divided by 5.9. So then it is 28.5%, which is far lower. Effectively, you'll say, Nigel, just, keep the point simple. If I bought it 900 rupees, what would happen? Then, in fact, 61 shares, that is 28.5% of that, will be bought back at 1,150. Then you need to exit the remaining shares. That's the remaining 154 shares at 800 rupees. So the stock could be mildly in the red.
Okay. All right. Thanks a lot for that, for explaining that so well, Nigel. Ikta, Sun Pharma again?
Well, the Baska facility, which was being inspected by the US FDA last week, that inspection was closed, I understand from my sources, on Friday. And I expect, it to have been a product-specific inspection, which is basically only for one product approval. So maybe we could see a little bit of a green take on Sun Pharma, simply because I understand from my sources that there weren't many observations also, and hence it could probably be positive.
Okay, we are staying on with Pharma, and what's interesting is that 2 Pharma stocks getting out of Sensex and 2 more financials being added. Nimish?
This will be effective from December 18th. As you rightly pointed out, Yes Bank and IndusInd Bank are getting added to the Sensex. This means that the financials weightage in the Sensex will go up close to 38%. So this is the highest that the financials have in the Sensex right now. The 2 pharma stocks are getting deleted from the Sensex, which is Lupin and Cipla, which means that the pharma's weightage in the Sensex will be now down to 3%. I think this is the lowest that the pharma weightage is in the Sensex since 2007. So clearly completely out of the favor. Now, many of the contrarian investors will feel that this is the last nail in the coffin, and maybe now it's a contra to bet on the pharma names from here on. But from a weightage point of view, this is the lowest that the pharma will have in the Sensex way back since 2007.
All right. Thanks, Amish, very much for that. Some index changes coming our way. Let's now move on to aviation, because we got the data for the month gone by, and load factors seem to be very robust. Sonal?
Absolutely, Surbhi. The air traffic data seemed really good this time around. DGCA came up with the data yesterday, and it shows that the number of passengers carried grew 20% year on year at 104 lakhs, and this is the highest in this calendar year. In terms of market share, Indigo remains the top notch with 39.7% market share. But in terms of PLFs, that is passenger load factors, SpiceJet has stolen the show with 93.7% of PLFs, and I expect the likes of Jet Airways, SpiceJet and Indigo to be in green today.
Okay, that's very good news for the aviation sector. Ronit, couple of results?
Yeah, so 2 results on my radar. S. Chand, weak set of results post their IPO. Revenue was down 38%, as well as the EBITDA loss more than widened to 19.7 crores, as well as they reported a loss of 10 crores. Moving on to GMT Auto, good jump in revenue of around 20%, but the margins took a beating, came around 480 basis points lower, as well as their PAT was down 55%. So you can expect both these stocks to be in the red.
Okay, all right, Ronit, thanks very much for that. So let's quickly recap our stock list for the morning. Stocks expected to gain are Patel Integrated, Snowman Logistics, All Cargo Logistics, L&T, Reliance Industrial Infra, Jay Corp, HDFC, Bajaj Finance, Indebbles Housing, Yes Bank, PNB, Strides Shasun, Eris Life Sciences, Sun Pharma, Biocon, Mayur Uniquoters, SpiceJet, Jet Airways, Interglobe Aviation, Voltas, Blue Star and Hitachi. It's a long list of winners this Monday morning. Stocks that could see some pressure today are Infosys, Shree Cement, Ultratech Cement, JK Lakshmi, Ambuja ACC, S-Chand and JMT Auto.